In our last video, we went through Rarible, and while we were analyzing Rarible and its competitors, we came across a competitor called Blur, which was severely undervalued, and I decided to take a look at it. In fact, Blur has been trending for the last 1 week, and the price has been rallying. So let's see what really this token is and whether you should really invest in it or not. To begin with, what exactly is Blur? Blur is a challenger to OpenSea. Right? Blur is a marketplace for NFTs. It is like an Amazon for NFTs. You can buy and sell NFTs. Right? As simple as that. That's what Blur is. What is the Blur token used for? Blur token is used to buy and sell these NFTs. Right? So there is a clear demand lever. In this video, we'll talk about what's great, what are the concerns that I have, what are the risks, and what should you really be doing. Now, the first point that's really great about Blur is the fact that it's founded by a YC MIT dropout. Um, he's 24 years old. His name, or at least online name, was Pac-Man, and his real identity was revealed recently. He's backed by some big names in the VC industry. So you have a pretty smart kid who's backed by big venture capital money. So that's great so far. The second part is that it's a proven market, right? We know that there exists a market for NFTs. How big, of course, is a open question, but there is a market for NFTs, and OpenSea has really shown us how billions of dollars of NFT trade can happen. And what essentially Pac-Man has done is gamified this whole experience with a bidding system, right? He has changed NFTs to sort of make it like DeFi meets NFTs. Right. And that is what has propelled Blur to its to nearly a leadership position in terms of trading volume, right? So much so that today they control 80% market share. They about 10 days back, Blur overtook OpenSea as the largest NFT trading platform. In fact, if you look at the analytics, it says as of right now, 81% of trading volume is with Blur. And it has forced OpenSea to cut their fee from 2.5% to zero. Right? That is the kind of effect that Blur has had on its competitors. However, not everything is hunky dory, because I have some concerns. Because in the same dashboard, I did notice one more graph on the right. It shows OpenSea has 100,000 unique trade accounts, whereas Blur has just 60,000. What explains the nearly double OpenSea trade accounts while Blur is so less? Well, that's the open question that we'll try and understand today. And what I did figure is that a lot of this has to do with wash trading. Right? So what exactly is wash trading? There are a number of traders who are essentially buying and selling the same NFT. They are just buying and selling. They're just bidding, buying, selling. Right? Why are they doing that? Because that is the incentive structure. That is what you can do to increase your bid points, which can hopefully get you some airdrops later on. In fact, there are full-fledged guides like this one that is written on how you can farm Blur to increase your bid points efficiently. So that whole model right now is driven by token rewards. And this whole why? Because this whole marketplace model incentivizes heavy bidding. Right? What exactly is that? How the finer details of it? I'll attach this other blog which talks about it. You can go through it. I'll not really get into the deep explanation of that in this video, but it's in the description if you're interested to try and go through and understand. So those are the key concerns that I have, that this is not a sustainable model, and that's the probably the first risk, because if it's not a sustainable model, it's doing great money today, but eventually it's going to crash. Right? Whales are probably gaming it, so you as a small fish are going to get squished. So please be careful of that. There's a risk of 90% dilution in 5 years. If you look at the vesting schedule, today we are something at around 360 million Blur tokens. This can go up to 3 billion Blur tokens in the next 4 or 5 years. That means you're risking 90% dilution. It just came out. In the next few months alone, you'll nearly number of tokens are going to double. So you're going to get diluted if the metrics do not hold up. Let's look at some key metrics, because we did see some interesting numbers, and that's one of the reasons why we came here. Blur has a circulating market cap of about 330 million, fully diluted at about 2.5 billion. They are, in the last 30 days, they have made something like 10.4 million in fee, and that's pretty good, right? Because if they continue at this rate, they can do about $126 million in fees this year. And just the multiple is 20.3x, right? Fully diluted market cap divided by the total fee that they can make this year, annualized fee, is about 20x, which is extremely low because Rarible was at 1000x, and lower the better, right? That's the thumb rule. If you look at other key metrics, like we can look at fees versus, let's say, daily active users in the last 180 days, and you can see that number has grown exponentially, right? From like something like 200 daily active users, they have gone all the way up to 18,000, 19,000 daily active users. Fee has also increased. This is that exponential curve that you want to see in all your crypto projects. Question is, will it sustain? Can it continue growing at that rate? If not growing, at least can it sustain that rate? Then these valuations make sense. Most likely not, right? Because the model will probably not allow it to do that. The last thing is that this rally may last till Binance listing. Blur is very early. It's just about 6 months old. It is listed on probably from Coinbase to Huobi, KuCoin, OKX, and one more, but it is not yet listed on Binance. So this price rally might last till the whole Binance listing, and after that, you might be holding a bag of worthless tokens. So please be careful. So what should you do? First thing is do your own research, of course. Go through the financials. I've linked that as well in the description. And my personal advice: stay away from this token because it seems like a lot of pump and dump at this point of time, driven by, of course, the whole token incentive model. So it might go up, but eventually it might crash, and you can't time it, and that's going to happen very quickly. And if you can't time it, then you'll be holding a bag of worthless tokens. So please stay away from this. That's my personal advice. Of course, make your own decision, do your own research, and come to your own conclusion. But that's just my advice. If you like this video, subscribe to the channel, comment on what else you would like me to talk about, and welcome to the Wave Crypto Club.